You see, while most people dread inflation like the plague, our financial elites have figured out how to not just survive, but thrive during these turbulent times. That's right, in this video, I'm going to spill the beans on 5 ways rich people make money with inflation. Now, let's get started. Number 1. Treasury inflation-protected securities, also known as TIPS. These are a strategic tool in the financial arsenal of affluent investors, seeking to safeguard their wealth against the erosive effects of inflation. These specialized bonds are issued and backed by the U.S. government, making them a reliable investment option for those aiming to hedge against inflation. TIPS operate on a unique principle. Unlike conventional bonds, the principal value of TIPS adjusts with changes in the Consumer Price Index, CPI, which is a measure of inflation. As inflation rises, the principal value of TIPS increases. This adjustment ensures that the purchasing power of the bondholder remains relatively constant in real terms, protecting them from the adverse impacts of inflation. Furthermore, TIPS pay interest on the adjusted principal value. This means that as the principal value increases with inflation, the interest payments also increase. The interest rate paid on TIPS is fixed, but the amount paid can vary due to the adjusted principal, thereby effectively providing investors with a safeguarded, inflation-adjusted income. The primary advantage of TIPS lies in their ability to offer a real rate of return above inflation. When held until maturity, TIPS provide investors with a hedge against inflation risk, ensuring that their investment grows in line with or above the rate of inflation. Additionally, these securities are backed by the full faith and credit of the U.S. government, making them low-risk investments compared to other inflation hedging options available in the market. Investing in TIPS provides affluent individuals with a secure means to protect their wealth against the erosive effects of inflation while guaranteeing a reasonable rate of return. However, it's important to note that the market value of TIPS can fluctuate with changes in real interest rates and market conditions, so their actual performance could vary based on these factors. Therefore, while TIPS serve as an effective hedge against inflation, like any investment, they require careful consideration and understanding of market dynamics. Number 2. Real estate investments. Real estate investments offer a multifaceted approach for wealthy individuals to counter the impacts of inflation. Let's delve deeper into this strategy. The rationale behind this choice is the unique characteristics of real estate as an asset class. As inflation climbs, the value of tangible assets like properties typically escalates. Real estate tends to be a solid store of value during inflationary periods due to its scarcity and the fact that people will always need housing, regardless of economic conditions. High-net-worth individuals strategically diversify their real estate holdings, investing not only in residential properties but also in commercial real estate, industrial spaces, and even land. These properties, when properly managed, can generate income through rents that tend to increase with inflation. Moreover, wealthy investors can use leverage by financing the purchase of properties with loans at lower fixed interest rates. As inflation climbs, the debt they have gets eroded in real terms due to the decreasing value of money. This scenario allows them to repay the debt with less valuable currency, essentially profiting from the inflationary environment. Additionally, the appreciation of property values acts as a substantial long-term hedge against inflation. Rising demand for real estate during inflationary periods can significantly boost the market value of these properties. Savvy investors also consider investing in real estate in areas with robust growth potential, capitalizing on the prospect of higher appreciation rates. In essence, real estate serves as a reliable shield against the erosive effects of inflation on wealth. Wealthy individuals exploit this characteristic by wisely positioning their real estate portfolios, understanding that during inflationary periods, real assets like land and property are likely to retain, if not increase, their value. This makes real estate an integral part of their wealth preservation and growth strategy during inflationary times. Number 3. Business ownership. The ownership of businesses is a compelling strategy adopted by the affluent to not only shield their wealth from inflation but also capitalize on it. The essence lies in the ability of these businesses to adapt to and even benefit from the inflationary environment. Successful entrepreneurs and affluent individuals often seek or build businesses that offer goods or services with inherent pricing power. These businesses possess the capacity to adjust their pricing strategies in response to inflation. This means they can raise the prices of their products or services in tandem with inflationary pressures. As a result, they maintain steady revenue streams despite economic fluctuations and rising costs. Furthermore, these businesses might operate in sectors less affected by inflation or, in some cases, benefit from it. For instance, companies in sectors like essential consumer goods, healthcare, or utilities tend to have relatively stable demand even during inflationary periods. Their products or services are considered necessities, providing a degree of insulation from economic volatility. Moreover, some businesses can capitalize on inflation through increased consumer spending. During inflation, people often look to spend money on tangible assets or invest in goods that can retain their value. Certain luxury goods or investments perceived as hedges against inflation might see increased demand, benefiting businesses in these sectors. Additionally, businesses that have the capacity to innovate and adapt quickly to changing economic conditions can thrive during inflation. They can optimize their operations, adjust supply chains, and innovate with new products or services, positioning themselves as leaders in their respective industries. In conclusion, owning businesses with pricing power is not just a means to protect wealth from inflationary erosion. It's also a pathway to thrive in an inflationary environment. These businesses, through their flexibility, adaptability, and strategic positioning, not only maintain stable revenues but also capitalize on the shifting economic landscape, ultimately adding to the wealth of their affluent owners. Number 4. Alternative investments. Alternative investments have gained traction among the wealthy due to their potential to provide diversification and serve as hedges against inflation and economic uncertainties. Let's delve deeper into these alternative investment avenues. Cryptocurrencies have emerged as a novel asset class, attracting the attention of high-net-worth individuals seeking to diversify their portfolios. The decentralized nature of cryptocurrencies and their limited supply mechanisms position them as potential hedges against inflation. Certain cryptocurrencies, like Bitcoin, are often considered a digital store of value comparable to gold, due to their scarcity and the fact that their supply cannot be manipulated by any central authority. Consequently, during times of inflation, where traditional fiat currencies may lose value, these digital assets might retain or even appreciate in value. Additionally, as technology advances and more industries adopt blockchain technology, the value and utility of certain cryptocurrencies may continue to increase. Art, another alternative investment, holds appeal for the affluent due to its tangible nature and potential for long-term value appreciation. During inflation, physical assets like art, vintage collectibles, and other tangible items are often seen as stores of value. Wealthy individuals often invest in art, not just for its aesthetic appeal but also for its potential to preserve wealth during economic turbulence. Rarity, historical significance, and demand among art collectors contribute to its potential value retention during inflationary periods. Hedge fund strategies are yet another avenue that the wealthy explore. Hedge funds employ a wide array of investment strategies to seek positive returns in various market conditions. These strategies might involve long and short positions in different asset classes, derivatives, arbitrage, or even alternative lending methods. Certain hedge fund strategies are designed to navigate and even capitalize on market volatility, making them potentially lucrative during inflationary periods. However, it's crucial to note that these strategies often come with higher risk and might not be accessible or suitable for all investors due to their complexity and minimum investment requirements. In conclusion, alternative investments present a spectrum of options for wealthy individuals to diversify their portfolios and potentially benefit from inflation. Whether through the digital frontier of cryptocurrencies, the timeless allure of art, or the sophisticated strategies employed by hedge funds, these alternative investments offer avenues for wealth preservation and growth during uncertain economic times. Number 5. Commodity investments. Investing in commodities is a favored avenue for affluent individuals seeking to diversify their portfolios and hedge against the eroding effects of inflation. Commodities such as gold, oil, agricultural products, and other natural resources possess intrinsic value and have historically been perceived as stores of wealth during economic uncertainty, especially during inflationary periods. Gold has long been regarded as a safe haven asset, sought after for its perceived stability and ability to retain value in times of economic turbulence. During inflation, the price of gold often surges, given its status as a hedge against the declining value of fiat currencies. It is seen as a tangible asset that holds its value over time, making it an attractive option for affluent investors aiming to safeguard their wealth. Similarly, oil and other energy commodities tend to exhibit positive correlations with inflation. As the prices of goods and services rise during inflationary periods, the demand for energy remains robust. Consequently, investments in oil or energy-related commodities can serve as a hedge against inflation, especially when there's a rise in global demand or geopolitical tensions affecting supply. Agricultural products, such as wheat, corn, or soybeans, are also popular among wealthy investors. These commodities often see increased demand during inflationary times due to their essential nature in feeding populations. Investments in agricultural commodities can be a means of participating in the global food market while potentially benefiting from increased prices during inflation. Commodity investments offer the wealthy a way to diversify their portfolios, not entirely dependent on traditional financial instruments. They tend to have low correlation with stocks and bonds, which means they can provide a buffer against market volatility. However, it's essential to recognize that commodity prices can be volatile due to factors such as geopolitical events, weather conditions, or shifts in global supply and demand. Therefore, while they offer potential inflation protection, prudent and diversified exposure to these assets is crucial to manage risk. Understanding how the wealthy navigate inflation can provide insights for us all. While these strategies may not be directly accessible to everyone, the principles behind them can guide our financial decisions. What are your thoughts on these strategies? Let us know in the comments below. Thank you for watching.